holding companies in India are just companies that hold stock of another company. This is there are lots of stocks like this. For instance, if you have look at a company like Tata Investments, you look at a company like Bajaj Holdings. These are companies whose primary, operations as a business is simply to hold shares of other companies. Tata Investments by itself does very little, and it just holds, a ton of shares of a lot of companies. It may sometimes have its own business operations. So M&M, for instance, is a car company, an auto company. It makes cars, a lot of interesting cars, but it is also the holding company for Tech Mahindra, for Mahindra Holidays, for Mahindra Life, Mahindra CIE, and a bunch of other companies. So it's also a holding company and an operating company. There are a number of companies like this. Sundaram Clayton is one. Sundaram Clayton is the promoter of TVS Motors. It is therefore a holding company of TVS Motors. There also could be indirect holdings through voting rights. Reliance owned a company called Independent Media Trust, something like that. So this IMT owned stake in Network 18 and then a bunch of other companies, and so on. So that is another type of holding company which you have an indirect control on. Now, what happens here? What are the kind of holding companies? So, for instance, you got companies like Tata Investments, where it is the holding company and, in fact, the promoter company of a lot of companies like Tata of Titan. It owns a small share in TCS, a large share in Tata Consumer, relatively speaking, Voltas, which is all these are Tata companies, but it also owns HDFC Bank, it owns ACC, it owns a bunch of other companies which are not related to the Tatas directly. Um, there's also Bajaj Holdings, which is primarily owning shares of Bajaj group companies, Bajaj Auto, Bajaj Finance, Bajaj FinServe, which is also a promoter of Bajaj Finance. Oh, it's complicated. HDFC Limited owns shares of HDFC Bank, which will soon merge and those shares will get delinked. But then HDFC Limited is also the promoter of HDFC AMC, HDFC Life. It owned shares of Gru Finance, which got merged into Bandhan Bank. So now it owns some shares of Bandhan Bank as well. And I think by nature, HDFC Bank is a holding company of HDB Finance and HDFC Securities. So there's a massive holding structure there as well. These are all holding companies in India. Some of them are operational, some of them are non-operational. Now, let us go through why they should, why they were something peculiar about Indian hold companies. They always trade at a discount. This is because they tend to be controlling or promoting entities of the companies that they are in. So Bajaj Holdings is a significant promoter, let us say, in Bajaj Auto. So it's not likely to sell those shares. It's likely to keep those shares for a long time. So the reason why a share would trade at its intrinsic value is because if the value can be realized. That means if you have 100 rupees of cash, can I, if I took over the company from you, do I get access to the 100 rupees of cash? Fantastic, great. I should value it 100 rupees. But if you are trading at, if I take over the company and then I get access to those shares and I have to be able to sell them. Now, a promoter company can't easily sell those shares because they will lose the promoter status and therefore control of the company that they own, and they don't want to do that. Bajaj Holdings and the Bajaj family perhaps does not want to lose control of Bajaj Auto just because Bajaj Holdings wants to sell its shares, right? So therefore, Bajaj Holdings will not sell its shares. Therefore, you cannot. It's difficult to realize the value of the shares held. You may not also have capital allocation decisions, therefore, because if Bajaj Auto is less valuable than, say, Hero MotoCorp, will they sell Bajaj Auto and buy Hero MotoCorp? The answer is no, because they have an vested interest in staying in Bajaj Auto, so they're going to continue with that. And they may not necessarily have, management rights or access to the companies that they hold. And you, as a shareholder of these holding companies, if you buy the holding company, you indirectly have very little control on what they actually own. So that is another pain, and there's a little bit of operational cost. So one of the questions is, in theory, why should they share? And I think that's the reason why they will not trade at the intrinsic value. They'll trade much below. So this is Tata Investment Corporation. As you can see, the market price, market price of this per share is 2,288 rupees. Market cap is 11,000 crores. This is very nice as a company. You might look at it. It says, okay, well, you know what? We have well, the price. We'll just refresh this at this rate, and then you'll see that the share price has actually gone up and down. It's pretty typically with the market. Sometimes it goes a little bit higher. The discount will narrow and widen over time. But typically, you're looking at something that is right now at 28 to 87. It's gone up and down, pretty much reflects the market. It's like a large cap mutual fund, honestly. I'll show you why. Now, if you look at this company as with a PE ratio, you look at it as 43 times. Oh, okay. But it's not like that. You can't value this company like that. It's like this. Think of it as a large cap mutual fund with an expense ratio. How much are its expenses, net expenses, effectively? In this case, 7 crores in a quarter. Forget the sales, because sales are largely sales of shares, right? So it's and some income that will come in from some bonds that they hold. Their expense ratio is primarily this, and if you open up the expenses, mostly well, there's nothing there. The employee cost is something, and then there's some tiny little cost as well. So you're looking at 24 crores on a company whose market cap is 11,000 crores. So that's like a 0.2% of the market cap is their cost, right, per year. So it's relatively cheap in terms of cost. They don't have any interest. They don't have any. So it's pretty much what they make as sales and revenue is what they will have as this. They'll pay some tax, and much of the tax is capital gains tax, so it tends to be lower. So therefore, it's relatively high PE, but the earnings don't matter because the earnings largely come from dividends or some sales and so on. Now look at the balance sheet of this company. If I looked at every quarter, they will actually announce in there this thing saying, listen, this is 30th September 2022. This is our dividend income, this is our interest income, this is the revenue from operations. But they will actually tell you the value per equity share. That means if you sold everything in the market and realize the value of it, everything that they own, it should realize 3,986 per share. If you look at Tata Investment Corporation's price today, it is 2,200, 3,900, 2,200, roughly 40% odd discount, 45% discount on the market share. So if you can, in some crazy way, go to Mr. Tata and say, boss, I want your ownership of this company, which Tata Sons own some 68, plus the rest of the Tata companies own about 73%. And Tata is a weird beast, okay? Tata Investment owns Tata Steel, and Tata Steel also owns Tata Investments, and it also owns Tata Consumer, 0.29%, very tiny. Tata Consumer is a promoter of Tata Investments, and Tata Investments is a promoter of. And if you look at the promoters of Tata Consumers, you'll find Tata Investments there. I think so. Yeah, there you go. Tata Investment Corporation. So they're both promoters of each other. It's one very weird thing that Tatas have done. And honestly, everybody says Tata, but look, this is all really weird stuff. So if you look at their balance sheet over here, they actually own things like Pidilite and Procter and Gamble and all of this. They own Tata Consumer Products as well. They own 44 million, 4.4 crore shares, valued at 3,441 crores. Now, of course, this value, but this is not value that I can realize, right? Because there is no way Tata Investment is selling shares of Tata Consumer. So you can assume this is a waste of a market cap, waste of a equity purchase, but it will only be realized as, they'll yield some dividends and all that. Titan as well, 4,533 crores. This is in lakhs, so I have to remove the last two digits. 4,533 crores of Tata Titan. Voltas as well, which is another Tata company, 1,200 crores. And they also own a bunch of others. So Tata Chemicals is one where they own 1,481 crores, but they also own KEI Industries, 11 crores. Larsen and Toubro, which Tata is not a promoter of, 146 crores. Asian Paints, which is of course not owned by Tata in any meaningful way, is 165. So they're like a large cap mutual fund. They own a lot of large cap companies. They own literally every bank from Axis to ICICI to little bit here and there. And if you add all of those up, this was as of March 2022. So excuse this thing, but by and large, they have 19,022 crores. So the market cap is 11,000. but the market value was 19,000 last year. It must be a little bit around there today also. So roughly 40% discount from what it was in March 2022. If they also have a bunch of unquoted shares, including the NSC. They also own a fairly large amount of bonds, 339 crores. Again, not huge here, but they also own debt mutual funds. I think there's a bunch over there. Government securities. Oh, they have everything. They even have invested in venture capital funds and a bunch of other companies. Largely, if you look at their total holdings, there will be a bunch of investment. This is the way investment companies, pure investment companies, are run. And this is an independent investment company. But if you look at the share price, it may not necessarily reflect. Once in a while, somebody will get really excited about this share and the price will go up. This is when the price went up, I think, not because the market went up, but because people said, oh, the discount is too much, we should narrow it. And then they went all the way and then bit came down. If you look at the share from the past also, you'll find some of these times when the share price goes up, like suddenly when the market hasn't equivalently gone up, right? So they this is like an aberration that happens. By and large, you should assume minimum 40% discount for holdcos in India. Of course, you can hope and pray that this will kind of come down, but in the last 10 years, I haven't seen these discounts come down, 20 years also. So it's unlikely to happen. Let's go back to the presentation, and you can actually buy them as a long-term play on the discount. Now, for instance, instead of owning a large cap mutual fund, you could own Tata Investments because it owns a lot of the large caps, and it's like buying a mutual fund at 40% discount to its market price, remembering that you will always sell at 40% discount. So technically, you're buying the large cap mutual fund, except you're going to buy and sell at 40% discount. If there is by chance one fantastic day that comes up, you might actually get 30% discount, in which case you will make more than the market. Or if you're really unlucky, the discount will widen to 50%, and then you will lose some money compared to the market. But what may happen in holdcos is that a demerger or spin-off can happen, and that can unlock some value. So if one company holds shares, for instance, mergers as well. HDFC Bank merges into HDFC, which is the owner of HDFC Bank. And the merger process, what it does is actually creates a company which has less outstanding shares than the individual two put together. Because one company holds, say, 10 shares in another company, and both companies have 100 shares each. The resulting company will have only 90 shares, because the 10 shares of the company that was held, which it'll get written off. And yeah, I mean, you might issue more shares, but it's a little complicated over there. But the sum of the two will actually be lesser than before the merger. Then I mean, sorry, less. There will be lesser shares outstanding as a combined entity, effectively, after the merger than before. So that creates a small bump up in earnings per share. But remember also that there is a set of costs and taxes that are involved when you have a holdco. A holdco receives dividend. If it does not distribute that dividend immediately to its shareholders, then it has to pay dividend distribution tax or some element like that, and they have to pay taxes on the dividend that they have received. So that could be 42%, for instance, or 25% at this point. And then you also have the problem of kind of issues with small issues with respect to how do you value this company that holds another entity, and there is no merger. So one of the things I've been asking is, why can't M&M separate the ownership that it has in some of the other companies that it owns, in order for us to realize the value of the auto company separately and the holding company separately? But the M&M management does not want to do that. I believe, by the way, Reliance might actually go down a demerger route, which is Reliance owns shares of Reliance Jio Ventures, Reliance Retail Ventures. It may say that, listen, every shareholder of Reliance gets an equivalent shareholding in Reliance Jio Ventures, gets an equivalent share. So you will end up with one share of Reliance, one share of Reliance Jio Ventures, and one share of Reliance Retail Ventures. You'll also get, right now, what is actually this. By the this, I'm not saying this will happen. I think this is my assessment of how that company will unravel itself. But already it is doing one thing. It is moving the financial services part of the business separately into a separate company, and instead of Reliance owning that Jio Financial Services, which is what it currently is, it is saying every shareholder of Reliance gets a share of Reliance Jio Financial Services Limited, which means that if you're a shareholder of Reliance today, whenever that record date comes, you will get shares of Reliance, this Geo Financial Services. So it's that demerger can unlock some value. It's also good for dividend yield portfolios where you get dividends. The dividends that come in, and because the whole co doesn't want to pay tax, it distributes the dividend straight away to somebody else. That's you as a shareholder. So you might be it may be good for getting dividend yields on some of these companies. If you're actually betting on the growth of the underlying company, don't buy the holdco, buy the actual company. Don't buy a Bajaj Finserv, buy Bajaj Finance, because if you're looking at the growth of Bajaj Finance, then buy Bajaj Finance instead. And another way could be to get exposure to unlisted businesses. Naukri at some point was is and currently is also the owner of a lot of shares of Zomato, a lot of shares of Policy Bazaar. When they were unlisted, if you watch their growth and you wanted to participate, the only way to go get their shares perhaps was to buy a Naukri rather than buy into Zomato directly, because Zomato wasn't listed at the time. So it's one way to kind of get exposure to unlisted companies where these companies have an ownership. I'll stop there. I think we have a bunch of